The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 13th fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, you can always send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question. And inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on fabulous, fantastic Friday the 13th. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to a lush show. Right now, the Dow up 110 points, 25,035 is the print. You've got the S&P up 5. She's trading out at 2803. NASDAQ 100 up 11 points. Russell's up 2. Semis are down 5 points. Transports are up 83. Spot volatility trading out at 1236. Coal's back $4. Lead the charge the upside. You've got Amazon up $13, Restoration Hardware up 11, Mercado Libre 10, Google 7. To the downside, Booking Holdings off 23, Lending Tree down 16, Netflix off 13, Ingredient INGR that's down $11. Of course, I want to look at what you want to look at, and there are no requests. So the request line is open, whether it's email, whether it's inside the Tiger's Den or by phone out there. But I suppose the question is, hey, Steve-O, what's going on in these markets? What is it that you see out here? What I see is, well, I say, in order to ask me, let's just go ask Bob. Hey, Bob, what do you see out there? You might say, what is Bob? But we're going to go take a look at Bob. Bob is our bullish or bearish indicator out here. This is the system that has the guts and glory, the technology, the mind power behind the tools that have led me to become the #1 market timer in the S&P 500. And what I did was incorporated all those tools into a subset of instructions with inside my Ninja Trader application. That's what we're looking at right now. And in this case here, we're looking at and we can use it for any time frame, for any instrument. Right now, we have the futures contracts, the equity futures contracts for the most part. Well, we've got the equity futures contract. You've got gold, silver, platinum, high-grade copper, and the 30-year treasury. And you can see that in this case, we're taking a look at, we have the opportunity to take a look at a 1 hour, 2 hour, 5 hour daily. We can, whatever, as I say, whatever time frames out here. In an instant, I know by taking a look at this where there's support, where there's resistance. Taking a look at Stevie's red line. That's that oscillator unchanged line. We also have our TAS market profile, support and resistance. The other thing that I have on this chart here is 1, 2, 5 and daily time frame. So 1 hour, 2 hour, 5 hour and daily time frame set of signals. That's that early warning signal for a top. The Rhodes momentum indicator. This is a beauty, folks, because what it does is it really identifies for you, if you're playing that game of liar's poker, well, you can't lie to you and I. So as we can see, let's take a look at the Dow as an example right now. And inside the Dow, That's going to be item number 3 to the downside. On the 1 hour, it's got a topping signal. On the 2 hour, a topping signal. The 5 hour, a topping confirmation pattern out here. Nothing on the daily, but you can see the NQ on the daily has a topping signal. The Russell has a topping signal, as well as some of the intraday time periods. So if we were going to ask Stevie, and Stevie would just say, hey, let's go ask Bob what he thinks. Bob believes that what the markets are doing right now is they are trying to form a top. Is that top in? No. Has that top been confirmed? No. We can go take a look at those things. But so we don't have to get too caught up into the numbers. What you and I want to do is simply get caught up into the patterns that are out here. So let's go take a look at it. Let's take a look at the Dow. Let's start with the Dow out here. And let's put the 5-hour time frame chart. 5-hour, basically breaks the day into four to five segments, if you will. And here, instead of showing candle charts, just simply because I can show a little bit more data, a little bit more easily on this chart, we're just looking at bar data. And what you'll see is Stevie's Rhodes momentum indicator on a 5-hour time frame, which has worked really well in all of 2018. Shoot, it's worked. You can go back through history. It's worked really well trying to identify those short-term or some type of tops and bottoms out here. You can take a look at the May. Let's just simply come back to May and take a look at the bottom that was formed back out here. This was the market was moving lower. I guarantee if bears were just saying, oh, this is never going to end, wrong. And on May 3rd, or right around there, is when you got that signal that the market's moving higher. Then the markets start moving higher into the time period of May 21st. Bulls are thinking, this is great. Wrong. Time for a breather. You get one of those Rhodes momentum indicator signals. Now, in that case, just a retracement. I don't know what retracement, 50%, 0.382, whatever it might have been. And as the market inside the Dow Equity Futures contract was moving higher into June 11th out there, bulls were licking their chops saying this is going to go on forever. Wrong, because Rhodes momentum indicator signal started being generated. We also have Stevie's red and green line out here. Very key. We actually have the TAS market profiles just shown a little bit differently. The black lines, in essence, are the top of the box, and the red lines are the bottom of the box. Just simply all the tools that you and I need in order to be able to interpret what the market is doing. This is how the market speaks to you and I. It is easy to learn the language. I like to teach people this language out here. Once you learn this language, it is very empowering. If we take a look at the last bottom that formed out there, and we come back into the June 28th time frame, a Rhodes momentum indicator signal. This is in the Dow. So now, based upon this, what do you think that the market, the Dow specifically, which has had a few nice days out here, what do you think it's communicating to you and I? That it is trying to, may not, but it is trying to, because we haven't gotten the confirmation out here, it's trying to form another topping pattern. Now, we don't have to stop there. That's the beauty of this whole thing, because in essence, what we're looking at on the screen here is what we're looking on the screen here, which is just simply, hey, you use that knowledge, use that technology, you put it right in front of you, and we know by taking a look, in this case here, inside the Dow, you've got the same type of pattern on a 1-hour basis, on a 2-hour basis, on a 5-hour basis, and you've got it for the NQ and the ES as well. It's a beautiful thing. Doesn't mean the market doesn't finish higher today, but be careful if you're a bull. Be careful. We're still in a consolidation. Steve Rhodes with TFNN. We'll be right back. A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. So we got a couple questions that have come in. One from Jim. Jim is asking if we could go take a look at Apple, give him a feel for what it is that Stevie sees when we take a look at Apple. So Jim, you didn't give me a time frame out there. No problem. We're going to take a look at 3 time frames. Here, when we take a look at my black charts, those are my E-signal charts. And the very right-hand side is a monthly chart. On the center panel is the weekly, and the one to the left is the daily time frame. So on a monthly basis, we can see a 1 to 1.272 A to B equals CD pattern that Apple is forming. Price is trading above the top of its monthly profile. There's no bullish reversal signal out here. So over the long haul, unless Apple generates some type of monthly bullish reversal signal, what it looks like it wants to do is move up into the 218 level. The strength along this C to D leg, just as strong as it was along the A to B leg, maybe just a tad stronger out there. So long term, that's what Apple looks like. We'll go take a look at the weekly and the daily, but let's just go first just take a look at this chart and look at the daily. Let's go from monthly to the daily. And what we can see that price did today, Jim, is it got up to a high of 191.84. 191.94 happens to be the top of a bearish structured market profile. You may say, what do you mean, jelly bean? And what I will show you is we'll turn off price. You're just looking at the left-hand panel chart, and we're looking at the 3 blue lines out here. In essence, each of those blue lines makes what we call a box, although you don't see the right-hand and left-hand side out here. What's important is to take a look at the proximity of where that center line is. On my chart here, it's priced at 190.05, the top of the box, 190.194, and the bottom, 185.34. Is there clearly visibility that expresses to you and I that the center line is closer to the top or the bottom? If it is closer to the top, which it is in this case, that tells you and I that this is a bearish structured box. Why? Because at 190.50, the center is where both bulls and bears are lined up, believing there's fair value, and just above it happen to be the sellers. They believe that's where you start taking target practice, the old snipers up there. And when you get a little window like we have, well, what this says is that this should be a tough area to get through. If you do get through it, if you do close over 190.194, then we like to say there's nothing more bullish than a failed bearish pattern out here. So what we do know is resistance inside of Apple has been hit. So it's very clear for you and I. If I take a look at Stevie's Ninja Trader tool, We can see that just like we were looking at the 5-hour time frame chart for the Dow equity futures contract, here's the daily chart for Apple. And what we can see is that was making, when it did make its highs, it did it with that exact same pattern out here. Very cool. This is Stevie's pattern that works on all time frames for all instruments. It's the pattern that's been present before every, and I said every, I mean every bear market that has existed inside the Dow for over 130 years. So the question is this an important pattern? I think so. So the question now is Apple going to make an A to B equals C to the downside? I don't know. I mean, we have a rising price oscillator above zero. We know that because price is above Stevie's red/green line out here, and the line is green. We know that it's up at resistance. So what's Apple going to do on the short term? I don't know. It's up at resistance is what we do know. I would initiate a new position, not now. And price could, if we see price get below 189.38 to be specific out there, getting back to 185.34 or even back to the swing point out here from the trading day of June 25th would be in the cards. Long term, Apple looks pretty good. Looks like it wants to eventually make a run to the 218.40 level. In order for it to do that, it's going to have to clear this 191.94 area out there. And that's what I see in Apple as we speak right now. Let's go see the next question coming in from SS. Scott wants to know, let's see here. The topping pattern you are referring to on a 5-hour chart in the broadcast, what would be your best guess? I'd like to guess where it might pull back to. Well, first, it has to confirm. It has to confirm. And it's a 5-hour time frame chart. And the next question is, should 401k and IRA money be taken off the table? No. No, we're looking at a 5-hour time frame chart here. This is not making a let me answer it to you like this, Scott. The pattern that you and I just had, the 5-hour time frame chart, what we just looked at in Apple, that is a pattern that has been present before the beginning of every bear market in the last 130 years for the Dow. Not every one of those patterns turns into a bear market. So just make sure that we're clear on that. The real question is that pattern present inside of the Dow on a daily, weekly, or monthly time frame? And the answer there is no. If that pattern isn't present, then all we're doing is take a look at 5-hour time frames that suggest there's some type of top that's in place, not a bear market top, and some type of and the pattern hasn't confirmed. The pattern in the 5-hour time frame must get below Stevie's red line or green line in this case. Here's the NQ as an example. The NQ at the last bottom made that same pattern, right? So at the bottom, now we're here right now at the top. You did get a nice bearish reversal signal. That took place at 9 o'clock. We see we have the top of the 5-hour time frame chart out here, slightly bearish in nature, the center line closer to the top of the box. But all price has done today is come back and tested Stevie's red line. It's green. We've got a rising price oscillator above zero. That's bullish out here. The first place that the NQ would pull back to, if this pattern closes below Stevie's red line, first place is 73.48. Second place is 72.82. Next place is 72.50 out here, or right around 72.50. That would be what I would be looking at. You asked specifically about the Dow equity futures contract. So let's go do that. But the most important thing is long-term money is totally different than, in essence, me trying to communicate to you what the markets are doing right here, right now. I like to think that I do a good enough job of being able to say, hey, long-term wise, what should you be doing or thinking about, which is why in the newsletter each day, it's got long-term for the S&P 500, using that in essence as my general guide for the market out here. And that is bullish, and that says remain bullish out here. Somebody is telling you that we've entered a bear market. Have them give me a call. Okay, because certainly I can teach them the pattern that's been present before the beginning of every bear market for the last 130 years, and it doesn't exist right now. Oh, of course, this time is different. No, it's not different. Now when we take a look at the Dow equity futures contract, you can see moving higher intraday, doing less. By the way, this pattern could go away on the 5-hour time frame chart. We need to see some type of confirmation. It's not there just yet. In the case of the Dow, you'd have to get it close below Stevie's green line. right? Green rent, that's 24,942. That number is going to move to the upside or downside. Even if it does, it really needs to close below the bottom of that 5-hour TAS market profile. And that's priced at 24,389. To answer your question, where could price pull back to if we were to see this pattern confirm, come to fruition, close below 24,389? The answer is very simple. All we do is we come back here to this Tom DeMark setup trend line, and that began at 2 o'clock in the afternoon on July 6th. And that price was 24,267. That would be the target on a 5-hour time frame. So it's a great pattern. It has worked so well at identifying tops and bottoms and doing it for every instrument. But should you go ahead and trade 401k money out there? Not if it's your long term. Not if it's your long term. All this other stuff I'm doing here and sharing with you, it's just noise. I try to make it a fun story because it then helps you out in the long term, but it's just a lot of noise. Good noise, by the way. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 112. S&P is up 14. And going back to Scott's question, well, really wasn't a question, but I'm going to turn it into the question with regard to long-term funds or 401k funds out here. We're taking Stevie's Bob system. And what we're doing, if your money was being managed by someone else, And for many of you, it is, right? Whether it's a 401k type of plan that you've got, and you're checking X number of boxes, or whether it's actually being managed by a wealth manager, whatever it is, basically what you're going through is an interview, your age, your comfort level with regard to risk, understanding your other assets, where you are at age-wise in comparison to future cash flows, what you're going to need, yada 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 yada. I don't usually say yada yada too much, but you know what I mean. And what they will then do, in essence, and it doesn't matter whether it's Morgan Stanley, whether it's Goldman Sachs, whether it's J.P. Morgan, they all are going to look something like this. Now, typically they look worse than this because they're actually, for the most part, not using ETFs. Instead, they're using other funds out there that have more fees associated with them. So be careful. But in essence, the theory is that you should have a properly balanced long-term portfolio. If we take a look at that, what that really means is that means you're taking your nest egg and you're breaking it down in between, in essence, U.S. equities. And if you take a look at what many of those wealth management funds will use, they'll use something like the IVV. You don't hear us talk about it, but in essence, that's the S&P 500, low-cost ETF, by the way. It's not a double or a triple or something like that. Yeah, they'll many times we'll also use Berkshire Hathaway. So you've got the B class shares that are out there. You'll take a look at mid caps. In this case here, we're looking at ticker symbol VO, micro caps, IWC, and the Russell 2000 value. That's a pretty good makeup of what most wealth managers would use, or something close to it, to take care of the U.S. equities. Wouldn't put everything all, so whatever percentage that might be, depending on your age. Maybe it's 30, maybe it's 70%, maybe it's 50, whatever it might be out there. So let's not get into that too much. But you take that percentage and it almost, equally distributed between that. Well, here's what's important is really understanding, Scott, what's the weekly and the monthly outlook? What is Bob's signal telling you? And if we take a look at U.S. equities, any of those, even Berkshire Hathaway, which has had a pretty decent pullback out here since the highs. Here's actually the chart in Berkshire Hathaway. Okay, so, it's well off of the highs of 217. You're at 190. I don't know if you consider that well off or not, but we're going to say it's well off of the highs. But you're trying to get rid of the noise. And the daily time frame can really be noise out there, unless you're going to really be an active manager. Okay, different thing. We're not going to get into that subject matter. But the important thing is to understand where U.S. equities are on the midterm and even the long term, whether it's weekly or it's monthly. And so you see that each of those are green, each of those, which means that for that weekly or for the monthly time frame, this signal has been around for 5 months or 5 weeks. It's 5 periods or less out there. And you'll see consolidating bull, breakout bull, bullish. Those would be the signals. Another portion of people's portfolios in being managed professionally would be in foreign equities. So let's not get caught up into the percentages. But if you take a look at the ETFs that would pretty much represent what that core set of holdings would be, you'd be taking a look at, for example, ticker symbol VEA. Write these down. Doesn't matter to me. SCZ, IEMG for emerging markets, and the EEM out there. What's important there is that when the signals start turning to bearish, you're going to go ahead and, in essence, close out that position, right, because of the signal, or you're going to look at levels of support, which I identify out there for you. And then you can go ahead and take that set of funds and pile it back into something that is performing well, such as the U.S. equities out there. So we take a look at foreign equities. You want to really be light in the loafers on that. Look at the daily signals, okay? They're telling us about their bear. Says the bear is over, and we can go and explain that further, but I won't right now. But if you take a look at fixed income, and this is the danger area out here, because depending on your age, a significant portion of your portfolio would be inside that area. And when you take a look at the weekly and the monthly outlook there, again, this is the exact same set of brain technology that was able to achieve that #1 ranking. There's no other magic, a little bit of fairy dust that I'm able to sprinkle because there are some other tools I couldn't actually program into this system out here. But if you just use this, you'd be light years ahead of the game out there. So to the extent that on your 401ks, you've checked a box out here that's giving you this kind of a portfolio makeup, which it may, you better go back and take a look at that fixed income section. When we start talking about bonds here and we're looking at the daily noise and stuff like that, that's different than managing your long-term portfolio. Other areas that typically you'll see your portfolio moved into, you'll see real estate, SCHH. That's one that is used often, or the global real estate. So you're covering U.S. real estate and global real estate. Yes, we've got the sector inside the S&P 500 that you can use. I'm just trying to give you predominantly what the wealth management group of folks would typically use out there. And that might represent 8% of your portfolio as an example. 4% in each. Maybe it's 6. It's all going to depend upon your portfolio out there. If we take a look at commodities, sometimes they'll use the Goldman Sachs commodity index, and there's an ETF for that. Oftentimes they'll just use like the energy sector inside of the S&P or a few other things, and then they'll take a part of that portfolio to look at dividend income, master limited partners, partnerships, and things of that sort out there. And sometimes there can be a pretty decent weighting, like 10% or so inside of that. But the Bob signals here, when you take a look at weekly and monthly performance, Scott, that's really what you want to understand. And then what you can take a look at is shifting some of those assets, rebalancing your portfolio, moving it into cash or something along those lines versus just simply when you get those bearish signals. And it is nice to see whether there's any Rhodes momentum indicator signals out here that identify a early top or an early bottom inside. So use that versus, when I take a look at a 5-hour time frame chart on the radio show, this show, TV show, whatever we're going to refer to it as, because I'm trying to provide, current active information and data. And I love days like this. The hardest thing to do, I find, maybe it's not you, is patience, is to have the patience. And is to not get the old Michael Jordan head fake and to not get taken in to somebody else's BS, because it was all before Steve was able to share with you and say, hey, this is how markets make tops and bottoms out there. So let's not, and we're in essence, especially the Dow, in a consolidation type market out there. As we have said, that makes it difficult for bulls and difficult for bears, and you should never get carried away on either side of the trade. If you catch one side of the trade out there, then applause sign for you, but just realize that that's going to come to an end, especially inside a consolidation. When we get beyond these consolidations, when we get these one-way markets, and somebody out there is saying, Steve-O, we're beyond the consolidation. Haven't you seen the breakout that's going on inside the NDX 100 and now maybe inside the S&P? And I would say I have. But when is a consolidation break not really a consolidation break? Only Bob knows. And Bob's our friend. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a couple of great questions that have come in during that break. The first, inside the Tiger's Den, paraphrase basically says, hey, thanks for the review of the time frames. As a short-term trader, here's the question. As a short-term trader, are index shorts warranted at this time, or merely stay flat and let some time pass out here? I'm going to answer that question using the 5-hour time frame chart. So I'm not interested right now in trying to sell the top tick. But if you do sell, then I can, if you were trying to do that, you do that, and I can share with you what it is that you would be looking at next. In the case of, and I say the answer to that question right now is to be patient, just to be patient. And it really goes with kind of like the second question as well out here, which came in from Mike R. And he was asking about Apogee and Perigee. Apogee coming in at, I believe it was 421 this morning. And that price point that we would mark inside the ES Mini is 2801.50. We're trading at 2802.50. So you're above that. So that would say that would warrant being patient out here. But here's what I've learned. There's a set of tools that we're using. First, Rhodes Momentum Indicator starts flashing, starts drawing these diagonal lines out here when the topping pattern begins to form. Just because it begins to form, it's an outlook, if you will. It can't really forecast what's going to happen next, just that it's beginning to form, and you should take notice out here. Then there's a certain incubation time period that you have to wait in order for you to really get that first signal out there. And then you must wait for the cavalry to arrive, in this case here, because as a topping signal, it would be the bears. We actually have that. That's what took place inside the Dow Equity Futures contract at 9 o'clock this morning. Really aggressive traders could have taken that trade using the 5-hour time frame. Would I have done that? No, I wouldn't have done that, because I'd be taking a look at the because if this is going to turn just as it did at the bottom, you can be patient and try to get more of the meat of that burger, so to speak, out here. And the reason why I wouldn't take it just yet is because if we look at the spot volatility index, we're going to see that's well below the 50-day exponential moving average. It's going to lag if there's going to be a turn. But and I'd be looking at things like maybe the advanced volume, the advanced decline oscillator line. See where we're at there. Well, we're still above zero in the New York Stock Exchange, as an example. Here's what you want, just to keep it easy. you've got to see price close below Stevie's green or red line, 24,939 in the Dow. And then I would say, because this is easy, the bottom of his 5-hour profile is only 24,389. You want to see it close below that in order to give you the best odds that this pattern is going to unfold. Otherwise, you're really trading early on early signals out there, and it can be dangerous. Now that's the Dow. We can go take a look at the NQ. I believe that's the Dow right now, believe it or not, with regard to its gain out there. That is the one that would give you the whoops, didn't mean to do that, would give you the best message out here, because prices because of the proximity of the bottom of its market profile. But I don't know, maybe there's new market profile inside the NQ. Let's go find out. What do I have out here? Here's the NQ. It's NG, but let's go to the NQ. And oh, there we go. Okay, so we've got the NQ. And so if the NQ has that same pattern out here, right? But what price hasn't done here, it has not closed below Stevie's red line at all. 73.73 is the number there. You've got to at least see it close below that. Coming into 2 o'clock, 14 minutes from now, you know, if this just holds, it tells you and I that buyers are still the ones that are in control. I'd only want to be short when I can get a message that it is sellers that are in control out here. Now, in the case of the NQ, there was a new profile that formed, and support here is 72.82. So the signal would come from the Dow. If you believe that all markets are tied together, it would first come from the Dow, because this is a much larger price move, should be a much larger price move, before the Dow would get below the bottom of its box. I don't know if I clearly said that. Hopefully I got that point across. That's in the NQ. If I take a look at the ES Mini out here, so we can go circle our horses, go take a look at it. Now, the thing about this set of patterns is the mere fact that it's showing up in all of the 5-hour time frame charts for the equity futures contracts give you and I a bit more confidence that what the market really is doing is trying to form a top out here. Hasn't given us that confirmation. And these patterns, first, they can fail, but we're not in the trade just yet. But these patterns, more than that they can fail, they can go away, because there's a very specific set of formulae that I use that says right now it's just an early warning signal out here. It's like living in Florida and I'm the governor and I'm saying, hey, there's a hurricane that's projected to hit. But I'm not telling you to go hop on I-95 or I-75 or any kind of 5 out there and start bugging out. I'm saying prepare, because this thing can change course. Same thing in essence inside this chart. It can change course out here. When do I know that I've got to ask you to start bugging out? On a 5-hour time frame. It's very simple. In the case of the ES Mini, not only do you have to close below Stevie's red line, which is right around 28.01 or something, you've got to close below the bottom of its market profile, which is 27.90.50 out there. So all of these are doing the same thing, which is good. If you're going to go from an early standpoint out here, well, then that comes back to the question that came in. I apologize, it's off my phone now. That was Mark, I believe, or, oh, there's a way for me to find out. Well, I thought there was. If you took the time to write in, Michael R. So Michael R. was really asking, I heard the caller on Wednesday ask about perigee. It's actually apogee that we're in, and how it affected the market short term. He mentioned that this lunar phase would be at 4 a.m., 4:21, I believe, was the exact time frame. And look at the S&P futures, which I have on my chart. Apogee at that time, where the ES Mini was trading, was 28.0150. Kind of interesting out here. It's not a swing point by any stretch of any imagination. It came in, price on the 30-minute base. I suggested looking at a 30-minute chart out here. Price got below it. All bounces found that to be resistance out here. When I say found it, 7:30 at the 8 o'clock time frame, at the 9:30 time frame. How is it that price at 9:30, the actual high, 28.0150? How was 28.0150 resistance? Because that's what it was. You tell me how that works out there. Yes. Did I discover it? Yeah, I discovered this tool. But can I tell you how it works? I have some suspicions that I'm not the only one aware of this out there. And there's this secret room of guys and gals that actually kind of know it, and they're sworn to secrecy. They're trying to figure out, how did that guy in Florida figure that out? could be hocus pocus. 2801.50. What happens when price goes above that and you're a short-term trader, as it did here at 10:30? It's saying, okay, being short is the wrong short-term move. But you have to then do the risk reward. Where is price going to go to when it breaks through a level of support or resistance? Always go back to the prior swing point. In essence, which is what it did right here in the ES Mini. The ES Mini was at 12:30 last night on July 13th, and where price got back to just tested that area, and it also found resistance out here. So I wouldn't go short on a short-term basis until we see a close below 2801.50. Then now you've got a new swing point. It may not be worth the reward risk out here, which right now is 27.93. Mike R, thanks for writing in. Mr. Z inside the den. I hope that kind of helps you out. The markets are trying to form a top. We may just have to wait till Sunday or early Monday before we get a confirmation, or not. Sidelines, best place to be right now. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Hey, on the homepage of TFNN.com, in our so-called carousel, that's this little thing over here on the left, you'll see a 3 essential tools workshop that I'm doing this coming Thursday, next Thursday. at 4:15 in the afternoon. I'd love you to attend. Now, this is a workshop that is being presented by me, hosted by Ninja Trader out there. Ninja Trader is the application that I use to create my Bob system, bullish or bearish out there. It's going to be a 30-minute workshop, so I'd like you to do is just sign on that, click on that page. It'll take you to the sign-up page. Now, up at the top, you'll see click here to go to Ninja Trader. You don't have to be using Ninja Trader. I'm not selling you on using Ninja Trader. If you're technology, if you're trying to learn patterns and so forth, it's a great tool, just like many of the charting applications are. But if you click on that, it's very simple to sign up. You'll see it'll take you to that page. All you do is give a first name, a last name, and an email address. Make sure the email address is correct, because in essence, that's how you're going to go ahead and get the information to log into the workshop. But it is as simple as that. It's not like one that's being done at TFNN where I can go ahead and archive it and put it on your members page out there. 30 minutes succinct, to the point out there, and you will get a lot out of it. Also, just as a celebratory summertime special, I am providing my Mastering Probability service, making it available to every single human being on the planet. That means that whether you have subscribed to my newsletter in the past or not, you can resubscribe to it. Check that out for the next 30 days out there. You can see that's under the special offer out here. Just click there, and that'll take you to the sign-up page for that. So I'd love to see you this coming Thursday. Don't delay. Go ahead and do it now. In the meantime, we're going to turn it over to your favorite polar bear, my favorite polar bear, and we'll get back together on Monday. And we'll see what additional signals have occurred since then with regard to the early warning market topping indicator that's being communicated to you and I, even with the Dow being up 100 points. We're more interested in the patterns than we are the price. Take care. Have a great weekend. Look forward to seeing you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.